Is mortgage forbearance your best option? This is what we want to figure out today. So I'm going to go through this slide deck really quickly with you. That way it's in print and you can hear it. And I'm going to go over a couple of the details with this to make sure that you're on the right path here. So in the recent months, we all know that a lot of us have found ourselves unable to pay our bills due to being laid off, furloughs, and health concerns. That's quite evident. Once that you know that paying your mortgage is going to be difficult, this is the biggest deal. Take action, like immediately. We know that things are rough and they've been rough and probably not going to get better too quick. All right, so let's see if forbearance is your best option. Are you experiencing a temporary hardship? Because mortgage forbearance is actually designed to be a very temporary fix over a short period of time if you're having trouble paying your loan right now. Currently, it typically lasts about 6 months, and there's quite a possibility that you might be able to get another 6 months as well, depending on the situation and depending on who holds your note. A temporary hardship can be defined as one that you should recover from by the time that the forbearance period is over. So the bank, one size fits all, has determined that a 6-month window should get everybody through, or with the addition of another 6 months as well. Work furloughs and layoffs are an example of a hardship that can be overcome within this time. So generally speaking, we thought that within 6 months everything would be back on track. So certain health issues that prevent you from working could also fall into this category. And now keep in mind that lenders can ask you to verify that the hardship is temporary, and they may request information about your current employment status. They also want to know about your income and assets. So they're not just going to potentially give you a forbearance because you're requesting it. There might be some loopholes that you have to jump through, or some information that you might need to provide. Now, we want to make sure that you don't have some other financial resources that you could step into in lieu of the forbearance. So since it's meant to be a last resort, before you risk foreclosure on your home. So this is not like, hey, you want a holiday from making your house payment. There's going to be ramifications to this. It's not going to be just a simple thing that you do and then it just goes away. It could have long-lasting, an impact on you. So for this reason, homeowners are encouraged to explore every possible option to continue making payments. This might make it necessary to pull funds from retirement or savings, and I know that costs money. Your 401k, it's going to cost money to pull it out, but save your home, don't go into forbearance, pull that money out. We've already had some clients that have had to do that. They actually had to go backwards and make their payments with their 401k to bring their house payment current so that they could go into a refi. And that'll come up here in a second too. So family members are sometimes willing to help out with a loan and a cash gift. We all know that we don't want to ask our family for help, but they might be able to get you through a month or two, of having either lower income or no income at all. Can you still cover a portion of your mortgage payments? So if you can, so mortgage forbearance plans take several different forms. Some homeowners can work out an agreement that allows them to only pay the loan or the interest for the loan interest for a while. So that might also assist you. So they would take you pay them the interest up front, which is what they're worried about, and tack the rest of it onto the back, which will earn the bank some more money. So that's why they might be willing to do that. So others may make partial payments or skip them completely. It is typically best to continue to make some type of payment on home loans. So again, this is not a holiday. This demonstrates responsibility to lenders, and you will have less money to repay when the forbearance period is over, obviously. So have you looked at your other options? Refinancing your loan for a lower interest rate may help you be better able to afford the payments. So again, this might be the option you try prior to doing a forbearance. So what I'm finding is that by the time everybody realizes that they want to do that refinance, it's too late because they did the forbearance. And this might be an option if you have been making your payments on time every month and can get a better interest rate on the loan. So next question, will you be able to manage the repayment plan? So again, the banks weren't truly explaining this to people in the very beginning. They were just simply saying, hey, do you want a forbearance? And they said, you can skip payments. So being human, we here want to skip payments, and we don't even say, well, how do I make it back up? what are the details of the forbearance plan. So you wouldn't think this is happening, but I'm running into this constantly now, where a forbearance is an issue. Hey, we didn't forbear our house. Well, I went into forbearance for my student loan. I went into forbearance for my car loan. These are going to cause you issues for buying a house or refinancing your current loan. So the forbearance agreement includes an outline of how lenders expect borrowers to repay their mortgage payments when the forbearance is over. That's what we just talked about. Some require a lump sum payment to cover the previous months of payments. So this is the worst case scenario, where the example before, I missed 6 payments of, let's go, $2,000. You know, now you owe 12 grand on month 7 plus the 2,000 that you're going to owe for month 7 anyway. So now you're looking at $14,000. This is the big one that people are getting hit with. So now other banks are going to allow you to miss payments to be tacked on to the end of the loan. So this would be the best case scenario, you know, kind of, sort of. So where you just take all that stuff and put it on the very end of the loan. Now this will have an impact if you decide to sell the house. This is going to affect your bottom line. You might also be able to divide up what is owed and add it to your regular monthly payments. That is, as we discussed earlier as well, let's say they just take it and, you know, we're just going to say you owe $500 extra a month. But remember, where are you going to be in 6 months or 12 months? Is that going to be feasible to go from $2,000 a month to $25,000 or $3,000? Because I'm sure they're not going to go with the lower amount. You know, first they're going to try to get as much money as possible. All right, so big issue, big point here. Making sure you can honor this agreement preserves your credit history and prevents future issues with getting a home loan. So this is probably the second big deal behind, you know, after you've made that decision, how you're going to get those payments, how you're going to repay those payments. This is the biggest decision here, or not the decision, but this is the biggest thing here, is to honor this agreement, because you were doing well prior to the forbearance. You want to make sure that you sail out of the other side of this forbearance looking just as beautiful as you did when you went into it. So the decision to seek forbearance is not one to make lightly, obviously. Depending upon your financial situation, you may be able to make other arrangements to cover your house payment. The important thing is, again, to take action now. Make that decision now, because things aren't going to get easier as you move into the future. You know, keeping your home underneath you is going to keep everything stable for you. It's going to keep that stable environment for you to come home to. It's going to make a lot of the other things that are happening around you that are out of your control easier to control in the meantime. So demonstrating your desire to uphold your responsibilities as a borrower helps you to maintain good standing with the lender. So to recap here, you want to make sure that that forbearance is the best option for you. You absolutely want to make sure it is the best option for you. I'm going to say that twice. So after you've made the decision to do so, you want to find out how they're going to deal with the missed payments. And so putting them on the end of the loan would appear to be the best solution, but I don't know what particular situation you're in. It's going to be a math equation for you. The other thing is too, the one thing that I didn't mention in the slide presentation, this forbearance is going to be on your credit report with the 3 major bureaus. It is going to say that your house payment is in forbearance. This is going to affect any borrowing decision that you need to make, period, end of story. To go ahead and recap what we've been talking about here, is forbearance the best option for you? You've got to make that personal decision, but you got to make it quickly. And the first thing you got to take into consideration is, how are you going to do the forbearance? Where is that money you owe going to go? At the end of the loan, in one lump payment within a couple of months, or are you going to try to spread it out? So the one thing that I didn't cover in the slide deck is that once you make a decision to go into forbearance, that is on your credit report. I am in forbearance with my home loan. I am not making my home loan. So if you decide to do a refinance, or you decide that you want to make a purchase or sell that home, the first thing they're going to do is pull that credit report, or when they do pull that credit report, it's going to say right there, I'm in forbearance. That means you can't get much of anything else for loan. So make the decision quickly, decide how you're going to handle it, and look at every other option you have first. Make sure that you don't have some money you can pull from a 401k. Make sure that you don't have money from the family that you could go get. It's imperative that you understand that this is going to kind of put you into a little bit of a limbo area where you're unable to make other financial decisions that you may need to make for your family. So that covers forbearance for today. Reach out to us anytime. My name's Cory, Modern Mortgage Lifestyles. My cell phone number is 702-204-0777. Thank you.